TJ the Wheel Joe coming at you live with another episode of Technically Speaking with TJ the Wheel Joe and featuring none other than UZI Options. How's it going, UZI?
It's going all right, TJ. How about yourself, man?
Man, I was doing real good until I decided to sell some naked calls, and then the market started ripping.
That's the way it works. That is the market metrics.
So you're welcome. You're welcome, everybody who wanted a nice green candle. This is why, because I was like, let me sell some naked calls on Tesla, some SOXL, and some NEO. And boy, oh boy, things are looking real good unless you're the guy who just sold the naked calls. But let's talk about it. Let's start with SOXL because we haven't featured that one on here, SOXL. So let me show you what I've done. Let me confess my sins to you, Uzi. So here, are you seeing that right there? The portfolio?
Yep, you can see it.
Ripping up. We are up a lot today. So that part's good. So let's just, let me minimize all of this right here. And let's just focus on the task at hand. So here on SOXL, we've got cash and carry puts at 17, 16, 15. For 516. So then I was like, well, two things can't be true. Those cash secure puts can't continue to be underwater and have some naked calls out in the distance that would also be underwater. So I decided to sell the 23s for the same expiration date, but only on 200 contracts. We have cash secure puts for 600 contracts on 17, 16, and 15 respectively, lots of 200. So I didn't go like super crazy and just sell 600 naked calls over here. I brought in 200 so that I could, bring some premiums through the door. So what's the chart telling you? Because this thing is all over the place. It's a weighted, it's 3 times leverage. Excuse me 1 second.
Yeah, no problem. Go right ahead.
Hey, Roland, I'm live on YouTube, brother. I'll call you after. Bye-bye. Roland always wants free help with this portfolio. It's a real good friend of mine, and I'm glad to help him. I just can't do it while I'm live on YouTube. So anyway, just an absolute awesome guy. I've known him for 20 years, man. So anyway, so what we got going on here is that, right? We got the cash care puts 17, 16, 15. The 17s and 16s are in the money, obviously. The 15s are out of the money. And then the naked calls at 23 for 200 contracts are out of the money. So what is your little hocus pocus Bell astrology saying over there? Let me get rid of this, remove, and then tell me what your little charts are saying on SOXL.
Yeah, let me get my screen share going here and present. And then we can take a look at the chart, share the screen, and then I want to share this one. Window.
I'm telling Alex we need a thumbnail, Uzi, because we do this regularly now. So it'll be 2 bald guys or something. I don't know.
All right, so we're looking at SOXL, and we're looking at, obviously, it's right now. So the first thing I noticed, and just going to draw your eyes to that as I bring my camera over is, we're sitting right now on the lower Bollinger Band. Price yesterday, and actually the day before yesterday, did penetrate to the downside. This is the daily chart. We're going to look at the weekly in a minute because you have is it next month?
Yeah, it's for everything got rolled over. It was for 417, but I'm doing the Tasty Trade way, managing 21 days to expiration. So I rolled everything out last Thursday or Friday to 516.
Great. So you had a month.
Yeah, we had time, 45 days.
Yep. Mm-hmm. And if we're going to look at let's just put a price, a line roughly right about at 23 because that's your strike. So right around here is
on the naked call. Because as you notice, I'm not that concerned about the cash secure puts at 17, 16, and 15 because even though those also carry unlimited risk technically to the downside. There's something about a cash secure put getting assigned and being underwater that feels so close to home to me versus selling naked calls and this thing could go to the moon and you're like, shit, at some point I got to make good on these shares, right? Because you don't own these shares.
Totally. So what the first thing is that's the first thing is the Bollinger Band. So right now we're in the lower Bollinger Band. So it looks like you've got some support in that area. It is a little bit oversold. RSI is at about 33. So the move is likely going to be a little bit of a bounce, especially if we get an overall market bounce. Now it's got the most recent swing low, which has been there's an area here that served as resistance on a few other occasions. If we look to the left, I'll draw a line here. So we've got a lot of resistance that price would have to get through to get to your 23 strike. So you've got a good amount of resistance ahead of the price to get through that to actually challenge your strike. That being said, you've got 1, 2, 3, 4, at least 5 or 6 touch points on this trend line. So that's going to be difficult for price to get through it. Of course it can, but you're at a good level because price would have to get through all those areas. And on a percentage basis, it would have to move up about 8 points, maybe call it 7 points. So 7 points on 15 is you have to move up about 30 to 50% from here, 40%. So that's a big move in a month. So I think those are going to be fine. Shouldn't have to do anything with those. Probably be able to let those just expire unless you like to close them on your management. But those look they're at a good safe level. And I'm curious.
I did it outside of the expected move. You know how they have that copper band on Tasty Trade.
Yep.
I was even outside of the expected move by like 1.5 points, I think. So it was between Kobe and Jordan. This is my technical prowess. Okay, it was like I was 23 for Jordan or 24 for Kobe. Kobe wasn't paying as much though. So I went with the goat of goats. I went with Jordan. I went with the 23 strike.
Yeah, so you're May 16th, right, TJ?
Yeah, 5/16.
Yeah, so you've got 5 points, like you said. So I don't know if it lines up with what Tasty says, but the expected market maker move on Thinkorswim is about 5 points.
Yeah.
So if you add 5 onto 16, that's 21. Yeah. And you're at 23. So you look good there. If we look at some of the other factors like MACD is not showing anything positive right now on the upside. Matter of fact, we just had a negative cross to the downside a couple of days ago, and I think that one looks pretty darn good. Let's just take a quick look at the weekly, just for argument's sake. Yeah, I mean, it kind of looks even stronger here now. The resistance that it's going to have to get through it. There's been about 1 through 3 weeks of resistance on the weekly that it would at about 21 and change. So those look great.
Absolutely. And guys, just for full context, so what's the game plan, right? So the game plan for me is to not fight this thing. And I would take ownership when we get to $20. I'll just give me 20,000 shares at $20. That means that my 15s, 16s, and 17s are printing, right? The cash secured puts. Give me the shares at $20, and then now it's like, hey, come after them at 23. You follow me? I will gladly sell them to you at 23. You'll see how the dynamic changes when you own the shares versus when you don't own the shares. The other option that I have is why I could just start rolling these. I could start rolling these naked calls, and I can also bring the strike prices on the cash secure puts up, right? So I can go from 15, 16, 17 to 18, 19, 20 and follow it up and keep bringing in more credits and then rolling out and up on the naked calls and then put a 30 handle on there and then sleep like this. Even if I had to do so for a little bit of a debit, I could do that because I've got all the credits from the cash secure puts. So there are ways to manage this thing and then also know what you own. This thing's not likely to go to $40 overnight because it's not a single stock. It's an ETF with 30 underlines on it. Right. And the sentiment's pretty bad on the semiconductors right now, right? Like you have Jensen basically saying that they miscalculated a little bit because he did that little talk with that cool sports jacket. And I saw the whole thing, but then I also saw a little clip of a couple of minutes where the guy's basically admitting that they miscalculated a few things, even though things are great. Maybe they might have overbuilt some stuff. So we'll see what happens, man. And then you got you got real big companies. This is just my basic logic. I try to keep things simple and I try to make sense out. Uzi, my basic logic. This is like trying to tie fundamentals with technicals. That's what I do.
Yeah, that's all good stuff. And with what you just said too about Jensen, he's always been, the glass is always full with him, rosy colored lenses. I mean, it was about time something was going to come around that is not so perfect in their world, and there you have it.
Yeah, for sure. So my big thing is, are all of these companies going to just continue to give NVIDIA money, just using NVIDIA? Or at some point, are they going to work on their own chips? You know what I mean? Like, are they like, dude, can we do anything to cut them out? But, NVIDIA is so dang good. But, I know Tesla's working on some stuff. I know Meta worked on some stuff. So I just feel like at some point the chickens are going to come home to roost. So I feel like Nvidia's got a 2, maybe 3 year window of just like holding everybody's feet to the fire and give us money because we have the best product. So these companies are all putting money into research and development and all that stuff.
Yeah.
You know what I mean? And they got a lot of smart people working over there too.
Yeah,
so
they're chasing. They're right in the tail, I think.
And then you have, a company like Intel that has, a new CEO that they're dealing with and stuff. So there's headwinds right now with the semiconductors, in my opinion. So I just felt like it was the right opportunity to go grab some of that covered call or naked call premium, because again, two things can't be true in this scenario since they have the same expiration date. I can't continue to get hammered on the cash secured puts and then be hammered on these naked calls at the same time. So I was like, well, this is one way to bring some more monies through the door. That way I can get more excited about taking ownership at 15, 16, 17. I don't think 15 and 16 would happen, but 17, I could totally see it happening. And then let me try to ride those up to 23. Because now if I took ownership of these cash secured puts because there's lots of 200. So if I took ownership of the ones at 17, well, then now all of a sudden it's not a naked cover call anymore.
Exactly.
So since I do have all of those lots in place with cash secured puts, these naked calls, they don't really feel that risky, if that makes sense. Because I don't anticipate waking up and SOXL is going to be trading at 30, 35 bucks. Because that's the thing where it could get very, very painful very, very quickly, right? So that's also why I was like, well, let me not sell 600 of them. Let me just sell 200 of them and see how those go. Let me get a little bit more information. We got April the 2nd tomorrow, all that stuff with the tariff talk and whatnot. So we'll just see what happens. So let's move on to another one because I know you're short on time and I am too. I got to help the wife put the dogs in the car. She's got to take them to get groomed, and you've got an appointment as well in 30 minutes, correct?
Yes, sir. Yep.
Keep it. Go ahead. Do you have anything else you wanted to add?
No, I'm really glad to see you're maximizing though your account now by selling both sides. Like option kind of led you to the water. You're jumping right on it, and that's so. Let's say we do a triangle in the room, right? If we do a triangle, then we take off one of the sides at certain, because something like you say, you can't be, price can't be at approaching both of your strikes at the same time. So once we'll get a move in the stock, we'll usually close one side of a triangle, right? So now we're just left with one side open, but we'll then reopen that other side again to keep bringing in more premium as the price fluctuates. So it's just similar to what you're doing. As you're in your positions now, you're selling the other side, and yeah, man, you're just maximizing your profit potential and premiums every week or every month.
Absolutely. I'm just trying to maximize it because I'm already taking on the risk of the cash secured puts.
Right.
So why not bring in, the money from the other side? So that's the thing. See, I'll see the kaleidoscope action right there. So now let's go back to it. So I did another one. So let's go Tesla this time because we spent more time on NIO last time.
Okay.
So I sold some naked calls on Tesla, and those are definitely going against me a little bit. Now I understand the risks here, but at the same time, let's keep it in context for a second. So I got 6,500 shares of Tesla in our account here, and I've got 35 cash secure puts at 200, 35 cash secure puts at 220, and 35 cash secure puts at 230, all for April the 17th. But then I've got covered calls for April the 17th at 300. So then I wanted to go a further cycle out, and I went to 350 calls, and these are naked now at 350. But I'm like, are they really that naked? Because I got all of these cash secure puts over here, and I do have the 6,500 shares that I could just roll and make good. You know what I'm saying? So it felt pretty risky, or not that risky actually, because I could easily make good on those shares with the shares that I own now, and then just babysitting the other lot of covered calls. So, and then I've also got cash secured puts at 175 way in the distance in January. So what are the charts telling you? Because I feel like this 350 can get challenged, but I also am okay rolling and babysitting and all that stuff, because like Tesla is like the one that I'm like legit long on. You follow me? Everything else, when push comes to shove, I would have to say in comparison to Tesla, it's a trade. Tesla is an investment that I'm selling a bunch of options around. Kind of like the way that I feel about SoFi and then Riot and then Amazon in those levels of conviction. It's Tesla, SoFi, Riot. And the only reason that Amazon's not the highest conviction is because the premiums suck. But as far as like a solid company, absolutely, it's Amazon, right? But anyway, so what's the chart telling you there? Because I know that I took on a little bit of risk there, but I wanted to bring in the credits because I'm trying to finance, and I've already financed it, but I want to continue to finance the 1,000 leaps that I spent, that we spent $257,000 on for SoFi. So anytime there's debits, since I'm a premium collector, I'm like, okay, this is a game of credits and debits. Let me make sure that I keep beefing up the credit side of things. You follow me? And then I don't have any calls on SoFi yet. I don't have any, got more cover calls or naked calls that I can sell on Riot. And I don't have any calls on Amazon because I took those off for a nice profit last week, looking for a nice green candle. So that's something that I want to put on here on Amazon here pretty soon, but I want to wait for the information from April the 2nd. So what is your technical prowess saying about Tesla? I understand the risks over here, but at the same time, I can always keep increasing the strike prices on the 200s, the 220s, the 230s to finance the rolling or whatever. If I just need to buy the shares outright, like I think I'm going to be okay. So what's your chart saying, Uzi? And let me put it on the screen.
Yeah, I think so. Yeah, I'll wait for you to put it up. And in the meantime, I am just going to do some drawings. So the first thing to note, before looking at some of the indicators, first thing to note is we have the 200-day moving average in orange dots, looming right above, which has served as resistance on at least 3 days here last week, right, or between the last week and a half, and then going back maybe a month, 3 weeks to a month, it also served as resistance, again, the 200-day moving average. So it's been proven that this 200-day moving average is going to be a problem for Tesla when it gets up near it again. Okay, and it looks like it's heading that way today. It's up nicely today, and it may be this week as well, because we might have a bounce in the market. So the past usually the past experience is going to stand true. It's going to probably serve as resistance in combination with, you have the 50-day moving average, which is angled down, coming right above it, and it's coming down at a pretty strong pace. So we have the 200-day moving average is actually starting to round down, and we have the 50-day moving average, which is pointed not straight down, but probably, let's call it a 45-degree angle. So that's almost like a trend line effect, if you will. So that's major resistance to boot right above it. Now, the problem for Tesla longs, when I'm talking about shares now, is that we might have a death cross looming in a couple of weeks as we have the 50 moving average heading down toward the 200. And that's what we call the death cross. And that's usually indicative of much lower prices in the stock price. So that's also something that is going to be weighing on price, trying to move up and get to your 300 level covered calls, and then your naked 350s, which is even further up above, and that's way above both the 200 and the 50-day moving average. So just from eyeballing it quickly, you've got great resistance ahead to prevent price from getting to either one. I mean, you might get challenged on the 300s, but like I said, you can roll those, for a credit, because the premiums on Tesla are great. And while you're doing that, if you needed to, you could also roll up your puts, like you said before, on SOXL. So you've got definitely some good choices here with Tesla. And Tesla paying such great premiums. I mean, I don't blame you for selling the extra naked 350s, because that's also, if we look to the left, that also coincides with an area of strong resistance on about 6 days of trading as well. And and with Tesla, Tesla it's a popularly traded stock. So these type of behaviors will repeat themselves. So where it found resistance in the past, it's going to find resistance again. It can get through it, but this is pretty tough resistance here when you have the moving averages bearing down on you. The short-term ones, like the 21 and the 8, which is the blue is 8 EMA, and the purple fuchsia is to 21. So I think you're looking golden on both of these as well.
Yeah, and the game plan there is just to take ownership of another 3,500 shares. I'm trying to get to 10,000 shares. So I only sold 35. I have 105. Actually, have 155 cash secured puts open. So I didn't sell the 105 that are all expiring on 4/17. I didn't do that. I only sold 35 because I want to see how the cash secured puts play out. Because if I decide to get assigned, I won't get assigned at like 200 is where I want to get assigned. You follow me?
Yep.
That's and then I'm like round the position off to 10,000 shares, and then I'll babysit cash secured puts until they expire worthless. And then obviously, if I'm babysitting cash secured puts, I don't have to be babysitting these naked calls, right? I'd much rather be babysitting these naked calls, because then that means the position's printing, right? And I'm like, I'll just keep rolling these and rolling these and rolling these, and eventually put a 450 handle on there, and I'll sleep easy at night. And I'm going to keep all of the cash secured puts in play, and I'm going to keep increasing the strike prices and following Tesla up, and so on and so forth. So you got to have a game plan whenever you're going to do this thing. You don't want to sell the other side just for the sake of selling the other side with no legitimate game plan in place, because that could be a recipe for disaster. UZI, what do you have to add to that?
100%. And as you're talking there, I'm just drawing some Fibonacci retracements on the weekly, and what we see here is that the 300 strike that you have falls right in between the 23% and the 38% retracement level. So that is the only one I do feel might get a little challenged, because Tesla being not only a darling to many traders, it can definitely get to the 38% retracement level. Although you do have only 2.5 weeks to go. It'll be close. The 300 is the only one that might get challenged, but
the 300 one is that one's for April the 17th. The 350s are for May the 16th.
Yeah.
But I am going to roll if Tesla touches 300. I am going to be rolling the 300s to 350, or at least 325 to April to May the 16th. Because I want to be rolling everything for at least break even or credits. You follow me?
Definitely.
And then I'm going to continue with the cash secured puts, and I'm going to stair step it up the way that it is there. Eventually, I probably won't run the stagger or ladder, or whatever you guys want to call it. I'll eventually just pick one. Like in this case, I would have probably just picked the 220s and just rock there and let the chips fall where they may. That way, the portfolio looks cleaner. I don't have as many positions out, if you will. But it's just kind of the way the cookie crumbled. I understand Tesla is extremely volatile, guys. It is what it is. I mean, this thing was approaching $500. I think it actually went over 500 not too long ago. But I also know that their earnings are going to be around the corner. I know that deliveries are going to be tomorrow. I think they're expecting 377,000 units. I don't think they're going to get there. And then at some point, somebody has to price in the vandalism and everything that's occurred. So I just feel like there's a lot of headwinds for my beloved Tesla right now. So it almost felt like I was obligated to sell the other side.
Yeah. And you do have earnings coming up on April 29th, it looks like.
Yeah.
So that'll be that could possibly affect your next month's strike.
Yeah.
Yeah, because let's see, just take a quick glance on their earnings, May 29th. So oh, I'm back on SOXL here. Sorry.
Hey, on the thumbnail, Uzi,
Yeah.
I want Alex to put some toupees on us just to see what it would look like with hair.
Yeah, that's fine. That's fine. Just give me a ponytail.
I want a mullet. You know, business in the front, party in the back. You know what I'm saying?
Yeah, that works. That would work. So wait, you're May 16th. So there's a $62 market maker expected move on your 350s for that expiry. Just to be aware of.
Yeah.
Just something to be aware of. Because you know, if it does get up some energy, it could get going. But you know,
and just to reference Wicked Stocks, because he does a daily a little spiel on Tesla technicals.
mm-hmm.
He says that Tesla needs to close over like 288 for it to kind of like reclaim a bullish sentiment on the charts or whatever.
Okay.
So if they can't get over that, he's actually anticipating $150 for Tesla. So that's kind of like it's got to get on the other side of that first before anything's even significant. And he has these speed lines, and his shit's like, you know, everybody does their own thing, right? As far as charts go, because you're just connecting dots that make sense to you at the end of the day.
Exactly.
So anyway, so that's kind of the thing too. It's like, okay, if I don't see Tesla closing over this 288 level anytime soon, because then at that point he's expecting that it could go to like 370 or something like that within like 2 to 3 weeks, like with a lot of velocity. Because the thing when Tesla picks a direction, even if it's a short-term direction, it seems to like go very quickly to that area. Like it's like a magnet almost. So
yeah.
I think, you know, like I said, I don't think these 350s are a sure thing, and I understand that, but also the intent was by that time I will have already taken ownership of shares. I'm not going to let it get out of hand, A. And B, I fully intend to roll up on the cash secured puts to take in more credits. That way, if I need to finance or rolling on the call side of things, even for a debit, it's not that painful because I'm doing it with other people's money.
Yeah. No, and the thing with Tesla is it's definitely if you, as you can see, if, you know, just looking back here, it's definitely been how do I say it? It's been a creature of the moving averages, the 50 and the 200. It looks like it wants to stay somewhat close to it. Now, I just noticed on the weekly, we did have a golden cross, but because it's been moving back and forth over it in the past, let's say 6 months or so, I wouldn't really call this, you know, call this to have too much validity. You know, it is a golden cross, you know, crossing from the 50 above the 200. But with all the negativity going on, like you mentioned, and the fact that if we are going to go sideways for a bit, I don't think this is going to have a lot of juice to start running up. And you're safe at the 50% retracement level on the fibs at 350 in a month. I do think you're going to be fine unless they kill it with earnings, and then you can just adjust it as you need, because there's always great premiums with Tesla. You can always roll that.
Yeah,
for a credit.
That's the beautiful thing, you know, like I could easily see me having a 400 handle. And then at that point, I'll probably go ahead and sell the rest of the contracts over there at 400. You know what I mean? Because then at that point, if we want to pay a little Russian roulette, I mean, the risk reward there for me, because I mean, the multiple on Tesla is absolutely redonkulous at 400. So, I mean, hell, it's ridiculous now. It becomes very Palantir-ish at 400. So, yeah, I like it, man. Do you have time for one more? I know you got to get going.
Definitely got one.
So I went ham on Neo again. So here's Neo. So where's a good old Neo? So Neo got 3,500 cash secured puts at $4, 1,500 cash secured puts at $4.50, all for May the 16th. So I already went from April the 17th to May the 16th. The Tasty Trade way, sell 30 to 45 days out, manage 21 days to expiration. I managed these on like 20 days to expiration. So it was like textbook stuff, right? Got in a shitload of credits, brought in a lot of credits, but then I had naked calls at $5 for April the 17th. So I rolled everything out, and I only had 3,500 naked calls. Now I have 5,000 naked calls at $5 for May the 16th. So two things can't be true. The 450s and the 4s cannot be getting challenged simultaneously with the $5 naked calls because of that 49 cents that I got there. That's my sweet spot, right? So what's Mel Astrology saying over there? I understand all of the risks. I'm also okay at any point just taking ownership of these shares over here and then just continuing to sell instead of naked calls, covered calls. And I also don't think I'm going to wake up and NIO's going to be at $7 a share. So I don't think that that's just likely to happen in this environment. China, tariffs, NIO's not a profitable company. I don't think BYD is going to buy them. I'm just, you know what I'm saying? Like I think of scenarios of what can like really move the needle overnight with NIO. You know what I mean? And it like like a takeover of this magnitude, all that stuff is very unlikely. So anyway, what's the chart saying? Let me get off of this thing right here and let me remove, or how do I do it? Remove this guy and then add yours. Okay, so what's the chart saying? UZI?
Yeah, again, so you've sold some calls here at the 5 level. I just marked it in yellow, and then I drew some Fibonacci retracements from this swing high here down to the lows of about 357. And we see a couple of things right off the bat. You've got moving averages stacked right above. You've got the 50-day moving average in yellow and the 200-day moving average in orange, and that is within, you've got a nice cushion between those moving averages and your $5 strike. You've also got your strike above the 61.8% retracement level, which would be another difficult spot for it to get through. And the 61 lines up pretty much dead even with the 200-day moving average. So that's going to be major resistance unless you get a news announcement. Now you can see how price has been gapping a few, on numerous occasions. There's been some news announcements, as you know, because you're following this closely, that have been causing these gap ups, the gaps down. And then we had the most recent move last week on, I forget the news, but
that big candle that you see, that real thick candle right there with the small wick on the top.
Yep.
Left to the left, right to the left. One more right there.
Yep.
That was that CATL announcement.
Okay.
Yeah, with that battery company, that's what that was. And then it held it for another day, and then big old red candle the other way. So
yeah,
it hasn't been able to show anything because I think again, NIO's been around for a hot minute. They've just delivered 713,000 cars, guys, in total. The street wants to see profitability. At some point, even though you're bringing a lot of revenue through the door, at some point, the street wants to know whether or not you know how to make money. You can, and what I'm talking about making money is making a profit. It's one thing to generate a lot of revenue. It's another thing to generate a lot of profit, right? That's why the Mag 7 are the Mag 7, because they're extremely profitable companies and they grow at a pretty high clip for companies that size. So that's why they get rewarded and they have all these monikers attached to them because they're anomalies, guys. Like these, your Facebooks or Metas and Googles and whatnot. Like these things don't happen every day. They're generational companies. They transcend a lot of ideas that people have of how a company should grow. And, these things have morphed into superheroes in the stock market, so to speak. And NIO is not that. NIO has proven that they can generate a lot of revenue, but they spend more than they generate, right? And by a large clip. So at some point, it's can you balance the budget? This is almost like looking at the U.S. economy, and it's like every like you look up one day and you're like, shit, we're $36 trillion in debt. How did that happen, right? So at some point, people look at a company like NIO and you're like, it's cool. You can bring a lot of money through the door, but does anything actually stick on the books? Or is it just like an LLC, a pass through, right? Is it a flow through like my taxes? Right. So, what's the chart saying there? I feel pretty good about these, to be honest with you. That's why I did all 5,000 of them. Like I didn't even mess around this time.
Yeah, and one more note, just I mean, looking at the MACD down at the bottom here, this bottom indicator, the MACD just crossed below what's called the zero or the neutral line, and that just goes to tell you that there's no strong trend to the upside. Matter of fact, it might be in a downtrend, but it's not looking strong to the upside anytime soon, and whenever you also have Bollinger Bands that go from being narrow to widening at such a fast pace, you're going to get consolidation. It takes a lot of time for this to digest that move. So it's going to probably drift maybe a little bit slightly sideways to upward without any type of threat and any to that $5 level. I don't see that happening.
Yeah.
Me
neither. So can you got time for one more? I know you got to go, but can you do Amazon for me real quickly? Because I was thinking about, I got 10,000 shares. It's like $203 or so, and I don't have any covered calls on these. I had these at 220 for April the 17th, but they were already at like 92%, so I just took them off because I'm like, why am I even holding this risk to the upside right now when there was just no meat on the bone? And I was like, let me wait for a nice little green candle, and then I'll put them on again at like 220, but I'll go May 16th because I want everything matching up, right? The tasty trade weight, 30 to 45 days out, managing 21 days to expiration. So I was thinking about just doing the 220s again, but I haven't even looked at the chart at all. This is the first time I see an Amazon chart in a while.
Yeah, so let's do it. Let's look at 220. Let me remove this because I just remove this.
Because it was at 230, 240 not too long ago, but it seemed like it double topped or it had like a double top up there, and then that's very bearish for the market, and it kind of came crashing down.
All right, so let's label this 220 exactly because this is important stuff. You don't have a position on here yet. All right. No. So I'll do it step by step. So we just put the price level up where you'd like to sell your covered calls.
Yeah.
And this is a process that you guys at home can do as well. If you're looking at doing a covered call position or naked call, as far as maybe part of a triangle, so you want to put the price level on your chart and then visualize and see what are the obstacles or what are the constraints that might show up. So right away we've got in the area. I mean, we already have the 200-day down below.
Right.
But we also have the 50-day moving average, which is angled down. So it's bearing down on the 200. And that price that TJ is thinking about selling is above the 50 and the 200. So that's a check. That's a check for the good. That's positive. It's also above the Bollinger Bands, which are coming down, and we're coming down in a fast way, but now looking like they're going to head a little sideways as price consolidates. So that's another check. At least you don't have Bollinger Bands that are angling upward, similar to over in this area here where the trend is clearly up. The trend is clearly down right now and potentially going to head sideways for a good bit of time until the market figures itself out what it's going to do. So that's also another check. So you have two checks. Now, if we do a quick Fibonacci draw, let's do retracement level from the swing high of 242.52 all the way down to where we are currently. Okay, and we see that for price to get to the 220 level, it would have to get all the way back to look at where it lines up precisely but almost just 21 cents off is the 61.8 retracement level. So even if price does a pretty strong retracement on this sell-off from 242 down to current levels, it's going to have to get all the way up to the 61.8. That would be a big challenge. And TJ, what do you have? Is it you're thinking about doing 30 days out?
Yeah, I was thinking about matching them up to 516, and I was thinking about doing 220. I actually thought about doing 222 just because I like the number 222. Mm-hmm. Just to give me like that extra little. Now that I see the 220 on there for the fib at 61.8, which is probably the most popular retracement level.
It is.
I kind of feel like I want that extra little cushion there. So, and I don't know that it pays a whole lot, but at the same time, I'm also okay selling these shares. So that takes another element out of the equation because I would, that's 10,000 shares, guys. That's $2.2 million that I would have to be able to sell cash secured puts on. And then with all this chop, all this volatility in the market, cash secured puts is a fun place to be right now because the premiums are definitely elevated.
Yeah. Yeah, and to boot, I did some math while you were talking there, and so if it for price to move where it is currently up to the 61.8, which is the 220 level, that would be a 14.5% move in 30 days. Again, not out of the question, but it's going to take a lot for that to happen. So what would it take? It would probably take some positive geopolitical news, maybe tariff news that tariffs aren't going to be as bad as was expected. But again, that's a far-fetched theory. Now, also another thing to look at would be the MACD. MACD is well below the zero or the signal line, the zero line, and with no clear trend to the upside. It's if anything, it's going to be going sideways like it shows here. And the histogram is also indicative of just sideways to downtrend. So yeah, you've got so many check marks in your favor on this one too. I think that's a good level.
Yeah, and it brings in, $17,400 on 1,000 contracts. It's 175 a contract at 220, and it's also outside of the expected move. Like, I know y'all aren't seeing it here, but the expected move has it from like 174 to like 211 for that particular cycle. So I'm like, again, this is why I don't want to own too many shares anymore, because I'm way too conservative with covered calls. And this is a 15 delta. You know what I mean? I'm like, a 20 delta would be at 220 or at 215, and then now I'm talking about bringing in a lot more money, like $26,000. So that's something that I consider. But then I'm like, shit, man. Well, $5 on 10,000 shares is 50 grand. You know what I mean? So that's where I always have a dilemma with covered calls. Whereas with cash secured puts, I just look at my premium and my owning the shares at these levels. There's just less guesswork. There's less guesswork. Whenever I own the shares, it's a little bit tougher for me. So that's why I'm kind of shying away from owning so many damn shares altogether, to be honest with you.
So I just added while you were speaking there, TJ, roughly the expected move is about 214, and there it shows up on the chart for the expiration that you're talking about. So that's the expected move, and you're thinking about selling the 220 or the 222s, and the expected move lines up precisely with about the 50-day moving average. So you're good. You look good there.
Yeah, I'm gonna go ahead and put it on. It's paying 18 grand, and I'm good with that. So yeah, here we go. Sell 100. And these are covered calls. So there we go. Got them filled. So brought in another 18,000. Nothing wrong with that. Nothing wrong with that. It's been a good day.
Nice.
Tempted, dude. If Tesla were to go to like 300, I'd be tempted to sell some more covered calls and just break in that premium. But this is where you want to also have some discipline and stuff, because I have several naked call positions on it. They were all to go against me. Trump talks back the tariffs and whatnot. We go on a face ripper rally.
Right.
It cost me several $100,000. So you have to be cognizant of the market that you're in, right?
100%. I mean, pressing buttons is so easy. That's where we have to definitely be disciplined, because the premium's out there.
Selling premiums is easy. Capturing them's a whole different game, right? So keep that in mind. I do feel good about all of these, but I think we'll revisit this segment here, Uzi, because I think you're really valuable to me with naked calls and stuff, so that just kind of like protect me against myself. I'm going to be managing these 21 days to expiration and stuff. Yeah. Anyway, I got to run. Hopefully y'all got some value out of it. It was short and sweet today. Uzi's got to run. I've got a smoothie in the freezer that I'm ready to get in. Bananas, strawberries, berries, protein shake, and water. So I'm not even using milk. I'm just using water. And I get it kind of thick, and it feels like a milkshake. At least that's what I'm telling myself.
Yo, that sounds good.
And I'm gonna go grab a workout. It's real easy today, dude. I'm gonna walk a couple of miles at a slight incline, just to try to get in that fat burning zone, and then I'll reward myself with a little bit of weight training after. Normally, I like to do the weight training on the front end, but then I have a hard time wanting to do any of the cardio on the back end. So I'm like, let me start with the cardio, get that out of the way, and then I reward myself with the weight training just to kind of confuse the mind and the muscles. But anyway, I got to get rocking and rolling, man. I appreciate you guys. TJ the Wheel Deal signing off with UZI Options. Thanks so much, UZI. This was good today.
Yeah, man.
As always, blue, stock screen. Peace out. God bless you guys.
Okay, buddy. Have a good day, everybody. Thanks, TJ.
Appreciate you, bud. Appreciate you, man.